Start with why. A tackle trading video. Have you ever stopped to really ask the question, why do I want to do this? You know, the financial markets through option, stock, forex, and futures offer opportunity to engage the market, invest, trade, protect, do a lot of different things through cash flow, a lot of different strategies. And there are great benefits to learning how to trade the markets. But it's not the only way to make money. A lot of people get down the process of learning how to trade, or they go into the field of trading and they don't really ever ask the question, why? Why am I doing this? And I do believe that why component is a huge part of anybody's journey. Here was a question I received recently from one of my students. He says, "You're a pro, an inspiring individual, seasoned investor, got a solid background behind you. I like to see people like you as a benchmark. You do your investments a certain way. For example, Matt does his way, Gino his, Steve Wong his, and so on. Many videos out there focus on one strategy, another strategy, then another one. They get to the fine details and the big picture is lost. At least for me, maybe to other beginners out there as well. Where do these strategies connect? Do they indeed connect at a certain point? How and when in space and time? I really miss the big picture sometimes. I've read lots about diversification versus focus. Buffett and Kiyosaki both believe in focus. They are a benchmark for me too. Others believe in diversification. So here's something that I'd love to see a video about. Asset allocation strategy. Maybe it can turn into a series of tackle trading, how pros tackle their investments. Pros would share their asset allocation strategies, explaining why they focus or diversify if they consider themselves conservatives, bold traders, etc. Would you share your asset allocation strategy with all the disclaimers and stuff? Like, this is not an investment suggestion. It is for X and Y purposes, no amount detailed, all precautions taken, etc. For example, 80% of my portfolio is invested in cash flow strategies. Of the total, 10% strategy A, 30% strategy B, 60% strategy C. 2. The 20% left, I invest in long-term stocks. Of the total, 70% stocks that pay dividends, 30% stocks plus strategy A, B, and C. Did I make myself clear? This is the one thing I'm always thinking about, the big picture. All the classes and readings never pointed me in a direction so far. Thanks for this opportunity. Have a nice week." And that was an email I received from Christian Sisson in 2015. And then we went on to actually create a video answering that question. And here we are 4 years later, we're updating that content to give it a modern 2019 feel. I remember getting the question from Christian and then instantly clicking record, going to the screen share, and just answering his question. And I want to answer that right now for everybody out there and kind of hit some of the bigger points. I read a book once called the Start With Why book by Simon Sinek. And I love Simon's writings. I like his mindset. He's a great speaker. He's a great author. It's a very easy read. Many of the broad principles that I'm going to talk about right now, I actually got from Simon Sinek. So full, kind of credit to where credit is due. Simon inspired me to kind of lead with this type of thinking and the answer to the question. First thing I would tell everybody is why. Why do you do what you do? What's the purpose? Until you can answer that, until you can answer why you want to fund a trading account, trade the market, and make money from it, well, then we can't really go further. What is the raw purpose? Do you want to stay at home and work? Do you need to prefer security? Do you need to make sure that you don't risk or lose too much money? Are you trying to make a certain income? Are you going to use the money you make from the markets to pay your mortgage and your car insurance and your bills every month? I mean, why you're starting this process and why you're doing any field, any business, it is the center as to why you will succeed. Because you're going to have challenges, you're going to have hurdles, you're going to have things that are going to come up in front of you that if you don't have a strong, driven why, they're going to throw you off. They're going to kick your momentum off. They're going to make you feel and question whether or not you should be doing this. Every venture that is worth it, that has had massive success, also had failures at different points throughout it. I can't think of a single organization that hasn't had setbacks, drawdowns, you name it. In the world of trading specifically, when it comes to the financial markets, you're going to have moments where you're like, holy cow, this is a lot harder than I thought it was. And if you don't have a strong why as to why you started the business to begin with, those moments are risks to you. They might derail you. They might put you off of a path towards success. So you must start with why. Number two, how. Once you've established why you do what you do, then you can start to build out how you do what you do. For example, if the why is you just want financial freedom to be able to work from home and not have to work for a soulless corporation, well, fantastic. There's a lot of ways you can do that. Trading could be one of them. You could be an entrepreneur. You could be an investor. You could do a lot of different things from that regard. Now, how are you going to do it? Right? How are you going to execute it? Now the nuts and bolts have to kind of come in outside of that why. And then lastly, what do you do? If the end product is going to be that you trade the financial markets as a day trader, that's a very different type of business than if you trade the financial markets as a cash flow position trader. So start with why, then how, and then what. Let's kind of dig into each one of those one at a time. The why, I wanted to trade the markets for a lot of reasons. I loved the idea of the freedom to be able to trade from home with a computer and a Wi-Fi connection. I loved the creativity of the financial markets. I found it very, very intriguing and fascinating that the biggest business in the world, where there are hundreds of billions of dollars being moved through these engines each and every day, is something I could tap into. I wanted to be a part of it, I just wanted to be a part of it. In fact, I remember when I got started, I was young. I was 25 years old and almost 26, about 1 month away from turning 26. And I just found the whole thing to be so fascinating and intriguing from the word go that my whys were about, pretty deep, I would say. Some of them pretty simple, some of them deeper than others. Simple thing is I wanted freedom. I wanted to be my own man where I didn't have to answer to a boss at 9 to 5 and punch a clock. I've always kind of had that independent streak to me. There's no question about it. And so the markets offered me that opportunity to approach the business in that way. You have to ask and answer this question. Why do you want to be a trader? You better have an answer to that question, because if you don't have a strong why, then you will be challenged and you're more likely to give up at some point in your journey. There are 4 building blocks to building the actual business of trading. If you have a strong why, it's going to operate outside of that. The first foundation is you must have a commitment to learning. Financial markets are not easy. You can't just go to YouTube University and watch videos from now till the end of time and become an expert at anything. I think one of the challenges many people have in the world that we live in is we have access to so much information. It feels like, well, just at our fingertips, we can learn anything we want, right? Well, yeah, but then you get frustrated, overwhelmed. You're trying to do too much. You have different voices. One person might be saying, do it this way. Another person might be saying, do it that way. And if you don't have a focused, structured, curriculum-based education with leadership in it that actually knows what they're doing, that can help you, it can become a frustrating point, Your commitment to learning has to be there, because you're going to have moments where it feels like this is impossible. You're going to have moments where you feel like it's the easiest thing in the world too, right? And that ebb and flow and that up and down as your overall progression as a trader develops, well, guess what? You need to stay committed to that, and because it's going to take some time. Proper expectations are an important thing in life, right? Proper expectations, anything. Think about almost anything. You go into a restaurant, if you go up to the person and say, hey, we're here to eat, we'd love to get a table. If they tell you 5 minutes and it takes 45, you're going to be frustrated. You're going to be upset, right? But if they say 45 minutes, we're slammed, this is the busiest time of the day, all that kind of stuff, then you can just make a decision to sit there and chat, and wait for your table, or go find a different restaurant. Proper expectations. In business, in trading, learning the markets, The idea that you're going to be able to come into the financial markets, learn it instantly, right away, get good at it, and be live trading the market successfully and consistently within, say, a few months, well, that may be overshooting it. In fact, it is for almost every student I've ever met. Doesn't mean you can't have success early, but I would venture to say it's a few months to become competent and at least understand the terms and theory and whatnot. It might be years to actually get good at it. I've been trading 14 years. I still learn more about humanity, myself, psychology, the business. I mean, things evolve, they change. This is not the type of profession or field that you're just ever finished. There's no such thing in investing as a completely finished product, because guess what? The underlying conditions can change in a way where you have to adapt to them. That commitment to learning is a lifelong commitment. You must have a strong commitment to learn this skill. Number two, you then learn the theory and terms. You got to know what a call option is, a put option, a strike price, a delta, a theta, a gamma. When you're new at trading, all of those things might feel overwhelming. They might be over the top. You might not know everything. You might be looking for a perfect glossary or a stack full of books behind you. All of those things are great. It does take some time to get the lingo down. And where you start getting structured education, say, you go through the step system, you go through the 7-step guide to trading, you go through different courses that are going to build your daily routine and your charting acumen and your option lingo understanding and all that kind of stuff. Once you get that stuff down, you can then start to build your skills and execution. Chart reading, order entry, trade management, journaling, so on and so forth. On a given day, you start your daily routine, you check the news, okay? You read the market information, you go into a weekly, a daily, an intraday chart. Can you read that and use the information to make decisions? That's skills and execution. I mean, you might be able to read in a book what an uptrend is and what support means. That's theory and terms, but that's not necessarily skills and execution. Skills and execution is actually getting in the thick of it, getting into the market and managing your portfolio, managing individual trades, researching trades, building trades, and building trading plans. All of those components, I mean, you're not going to become a great trader through skills and execution until you know the theory and terms. So the first step, commitment to learning, then learn theory and terms, and then build skills and execution. Number 4, then you build systems and strategies. Now, System Development 101 is a course on tackletrading.com. Highly recommend that you get a pro membership, go and watch that course and understand the steps one at a time. In fact, I mean, that's the crown jewel. I mean, it is what we do is we have systems of decision making on how we use our money to engage the market, to generate profits, to mitigate risk, so on and so forth. Now, you can use somebody else's system, right? You can learn a system from a veteran mentor trader and actually just use that and apply it. Okay? I've seen this mistake many times. Somebody who wants to learn the markets, they hear somebody talking about, say, some strategy that generates income or, consistent profits or whatever it is. They buy the rules, they get the videos, they plug them in, they go through the whole thing, but they don't actually know how to trade yet. And so they're trying to just mirror, what they're seeing on the screen in the rules, hoping that the results will be positive, and then they give up on it if they don't have, number 1, a commitment to learning. If you didn't put the time in to understand the nature of mathematics and drawdown and risk and reward and all of the actual things that go behind it, if you didn't put the time in to learn theory and terms like the ones I just dropped, drawdowns and expectancy and profit loss ratios, and you didn't put the time in to actually learn and build your skills and execution so you know how to put an order in and understand what you're reading on your screen and manage your trade, trying to skip to step 4 is a failed approach, okay? There are no shortcuts in this process. If you want to be a good trader, you've got to put the work in, okay? You've got to put the time in. You've got to put the seat time in. No question about it. Commitment to learning, number 1. Number 2, theory and terms. Number 3, skills and execution. And number 4, build a system and a strategy. And why exist outside of all of that? See, what I just described, steps 1, 2, 3, and 4, that's what you'll do. That's how you'll do it. That's how you'll develop. That's what you're going to execute. You still have to ask the question, why do I want to do this? Why am I starting this journey in the first place? Step 1, then 2, then 3, then 4. Why do I want to climb that mountain peak? And that is an important component of any successful journey, is to have that strong drive behind what you're doing and how you're doing, so that you can ask and answer the question, this is why I'm going to do it. And that will make sure that you do not waver in your commitment to your journey. Then, yes, we will need to define and identify the what. What products are you going to trade? Okay. Are you going to trade equities, Forex, futures, options, crypto? Going to trade Bitcoin? Once you've determined which product you'll trade, what time frame will you trade? Are you going to trade as a day trader in the morning before your kids get up and go to school, right? Are you going to work the futures market because you live on the East Coast and it gives you the ability to day trade the market before you catch the train every morning, whatever it might be? Are you going to trade the Forex market because you live in Australia or Hawaii and the U.S. markets are not when you are mostly awake? In Hawaii, the U.S. markets open up at 3:30 a.m. Maybe you want to trade Forex because you want to be a day trader. I don't know, just examples here. And by the way, you can absolutely trade options and stock in Hawaii as well. But the thing about it is you must identify what type of product you're going to trade, what time frame you're going to trade, and so that you can execute those skills. And then it comes down to the 80-20 rule. My personal approach to how I build portfolios is the 80-20 rule. 80% of the time, I use bread and butter strategies. Now, what I mean by bread and butter, theta. Something that generates positive theta. In the marketplace, positive theta is the mathematical measure that time passing will benefit the trade strategy that you're using. Okay? Examples of positive theta strategy. Well, naked puts, covered calls, iron condors, bull put spreads, bear call spreads, time spreads, diagonal spreads, certain butterfly spreads. The main theta strategies that I use are going to be those ones, right? And that's part of my bread and butter. Number 2, Vega. Volatility cycles, in my opinion, are the second most predictable thing in the marketplace. Okay, and we know that time passing is the most predictable thing in the market. Today is one day, and tomorrow will be the next. Tomorrow will be the next, and the next day will be the next. Right? So time passing is something you can build your bread and butter around. But volatility you can as well. I mean, when an earnings report happens, the stock is going to move. Okay, the volatility, the implied volatility, is going to build up into earnings and then it's going to fall off, right? The VIX is going to rally during times of fear and then it will settle in most of the other times. So I like Vega-based strategies as well as a part of my bread and butter in trading portfolios. And the thing about the 80-20 rule, bread and butter type strategies, I mean, in certain accounts, you might actually use certain strategies as a bread and butter strategy. I'll give you a really good example, the iron condor. If you're in a margin trading account where your goal is to, use the options market to build as much theta positive in your account that you can, iron condor might be perfect. But maybe in your retirement account, you don't trade them at all, Maybe you say in the retirement account, I'm only going to do the boomerang trade, or I'm only going to do covered calls and equity and leap options, something like that. I'm not saying you have to do it the way I'm describing. What I am saying is whatever your rules are on portfolio design and asset allocation, they must be defined per account type. And I generally have a philosophy that short-term trading accounts should be designed differently than long-term investment accounts. Long-term investment accounts are about investing, protecting, and getting cash flow out of them. Your targets will be a little bit smaller. Okay, short-term trading accounts, you're more aggressively engaging the market with risk controls and all those other things through your skill sets. And you might be more willing to trade a more advanced strategy in your bread and butter. And then 20% of the time, I'm going to, pull out my bag of tricks, right? And what does that mean? Well, a straight old long call option, for example. In somebody else's account, maybe they're more likely to use long calls much more frequently than I would want to. They would have a different design than I do. My 80/20 rule forces me to put certain strategies in bread and butter and certain strategies in the bag of tricks. Delta strategies for me is a smaller component, just straight old delta, right? A long call, a long put, a day trade. And one of the reasons why I kind of kick it into the 20% bag of tricks is, for me, you don't have to trade those all that often, right? They're naturally leveraged. You're going to use some of your capital for them. And it's just the way you put all the puzzle pieces together in how you allocate your portfolio. And gamma-based strategies like day trading scalps and, different advanced type systems where you're trying to take advantage of rapid movement or the change in delta, they're going to go in the bag of tricks as well. So when I'm designing portfolios, I break the strategy, much like we do at tackletrading.com, based on theta, vega, delta, and gamma. And then I start to allocate them into bread and butter versus bag of trick strategies. So how many strategies should you have? Well, it just depends on you. This is the what, right? This is what you trade. You're going to trade certain types of products, and how you trade. You're going to trade certain types of strategies within those products. It's not as important as you might think. You want to keep it simple. Don't trade anything live that you don't know that you're good enough to make money with. Okay, that's number one. Should be common sense, but it must be said. Number two is practice what you don't know. See if you can build consistency with it. Go into back testing and design and paper trading and get enough data to really identify, does this system and strategy actually fit into my bread and butter? Is it consistent enough? Or is it something I want to do occasionally, but not every day in the market or every week in the market? Well, that might be a bag of tricks strategy. I'll give you an example of a bag of tricks strategy for me. And that's going to be when I do like a butterfly on an index, on a short-term move. I have a system where I do that. I don't do it every week. I only do it when the markets give me a certain signal, but it's still in my playbook. There's different ways that you can approach it. The next thing that you have to identify is the how. How are you going to trade? Are you going to day trade? Where you put your money in the morning, take it out some point during the day. While you day trade, are you looking to make 15 or 20 day trades in a day where you're scalping? Or are you looking to make 2 or 3 key day trades in a day, manage the risk, and then follow the trends? How you do this is really important, Are you going to swing trade? Are you working a 9 to 5? Are you working a company? Are you building your business outside of this as well, and trading is a part-time thing you're doing? Well, maybe you only have an hour a day in the morning or the evening, and swing trading is the way you're going to approach it. Are you going to position trade, where you put money in and manage it over time, but you might hold it in there into a credit trade or a cover call, for example, for a month, or even 2 months on some positions? Or are you more of an investor who's just going to manage your family money and manage your retirement accounts and try to improve the overall returns, but you want to manage the risk in them as well? Whatever the answer to your question is, the how is important. What is your system and which strategies are you going to trade? What is your portfolio design? The how really is vital, okay? And if you think about it, day trading, it requires a certain skill set. It also requires a certain acumen and a time frame. Also, you got to know the products. Futures, Forex, those tend to be better products in day trading. Some day traders trade stock. Other day traders, might trade options and use them that way. But when you shorten time frame down to day trading, you're also putting pressure on the emotions of yourself, right? And going from paper trading into live day trading is a very different deal as well, because getting fill prices and understanding your emotions as the money is moving up and down. Day trading has tremendous opportunities. There's no question about it, but it is not for everybody. It just depends on the individual and whether or not they can build a system that fits their style. Swing trading, fantastic. It's one of the most common types of trading that our traders will end up doing because, swing trading nicely fits a busy lifestyle as well. while you're still working or finishing a career or you're busy with family, you can still swing trade the markets. Investing, everybody should invest, in my opinion, whether or not you do trade. And by the way, you don't have to just trade one of these, but how you execute and use the capital in your trading accounts as well as your retirement accounts is an important component. And then the position trader, if you think of a covered call as a position trade, which I do, in general, a lot of our traders do position trading. It's a very common strategy. Naked puts can be position trades. The iron condor is a position trade. But then even just, getting into an equity position, putting in an appropriate stop loss and holding on to something as the trend develops. Trend-based trading can be position trading as well. So how you decide to trade is very important, obviously, and it all kind of fits together, whether it's through theta or delta or vega or gamma, those are different strategies. That's where you come up with your bag of tricks and your bread and butter systems and start to backfill those into an organized and disciplined way. If you don't have the strategies down well enough, to trade them consistently, you may need to revisit where you are in the process of learning how to trade and how to develop as a trader. So, great question, and I love the topic. You're going to need to build out your trading plan, your trading business framework, the structure of your portfolio design, and build this like a business. Be a business-like person. And if you're out there and you're listening to this right now and watching this video, and just take it from me, a 14-year veteran of the financial markets where I've trained and educated thousands of people across this planet, work with people one-on-one, you got to have a strong drive. You have to have a strong why behind what you're building here. And if you want to be a trader, you can build the skill sets, but do it properly, trust the process, develop your skill sets, and you're going to have a much higher probability of success if that why is going to keep pushing you through the ups and downs that any natural trader is going to go through. TackleTrading.com. If you're new to tackle trading, join us, bit.ly/join tackle pro.